This year. Our next guest says now is a good time to take some profits. By the way, Tesla is up 8.5% today to over $1,600 a share. CFRA senior equity analyst Garrett Nelson is looking for a $400 drop in the next 12 months. His target is only $1,100. Garrett, it's great to have you. Welcome.
Thanks for having me.
You know, this shouldn't be a bold call, but it is. You know, going against the Tesla momentum has been a losing game. I think it's on the front page of the Wall Street Journal today, you know, talking to investors who go, I know it's run up too much, but I can't bear to part with it. What are the red flags that you see for the stock?
Sure. So we view this as a story stock that's had a very impressive run of positive news flow for several months now, but we're seeing some cracks in the story, and we think the shares have gotten ahead of those underlying fundamentals here. For one, they recently lowered the price of their Model Y vehicle, which they just debuted in March. They're already lowering the price of that. Secondly, there's been a big drop in registrations for new Teslas reported in California, which is by far their largest market in the U.S. There's also been a lot of speculative buying, much of which has come from retail investors, which is never a good sign in our view. And then also the short interest has come down to only 7.5% of shares outstanding. A year ago, short interest was over 23%. So we think a lot of the recent move has been caused by a major short squeeze. They're also entering a major CapEx cycle. So their CapEx spending in each of the next 3 years will be about $3 billion, up from only $1.3 billion last year. So that's, in our view, is going to really act as a drag on free cash flow. And that's because they're building the new factories in Germany and then in the U.S. also.
No, you have a number of reasons here. I mean, correct me if you already mentioned this, including you think the autonomous driving technology is not ready this year for the autonomous driving vehicle, still can't turn properly, along with some other issues. So, you know, it's all well and good, but especially if you've been kind of dragged higher by the stock price momentum, how much does this fundamental analysis matter, or is the stock simply going to stop working when it stops working?
We think when those red flags become more apparent, this meteoric run-up kind of stops. And certainly short covering is going to be less of a factor than it has been over the last 12 months. So we think, you know, now's a good time to take profits. Of course, when they report on Wednesday, all eyes will be on the GAAP earnings for the quarter. If they post a profit, then they become eligible for inclusion into the S&P 500. So there's been a lot of buying by funds ahead of that, the thinking being that index funds will have to buy the stock if it is added to the S&P 500.
Yeah.
But it's no guarantee that they will post a GAAP profit. And if they don't, watch out below.
Any other things that you would point to on Wednesday in particular that could become a catalyst for this long overdue selling pressure in your view?
Really, this quarter more than any quarter, all eyes are going to be on the GAAP earnings number. Normally, you know, analysts look at the operating earnings, but you know, that's really not going to be you know, as applicable this quarter. So everyone's looking at the GAAP earnings number. Also, news regarding construction progress in Germany, and then the new factory in the U.S.
And finally, well, actually, you know what? I should save the finally for Wednesday, Garrett, because we're almost out of time. We appreciate you detailing the red flags for us and joining us today. Garrett Nelson, thank you so much.
Thank you.